Welcome to Investors Insights. Our topic today is year-end tailwinds. We chose that topic because last week we were talking about the volatility in the market, things that were holding the market back. We've been through a brutal October, and November was not dull either. And so what tailwinds are we working with now as we approach the end of 2018, heading into 2019? You guys came at me full force today with your information. And Bobby, talk about, today everybody's going to be saying, oh, the market took off. U.S.-China reached an agreement. The Fed talked about easing on interest rates. Talk about that in relation to what we've been through.
Yeah, so we need some tailwinds to finish the year off strong because October was one of the nastiest months ever. Going back to 1901, there haven't been that many asset classes that were down in a single month.
Right.
So as we talked last week, we said that we needed the Fed, we needed a strong GDP number, and we needed the trade talk to be positive, and we got all three of those. Hopefully that will be our tailwind leading into December because, we still have a lot of room to make up since October.
Absolutely, but that also brings up why we do these vlogs.
Exactly. Right.
We do these vlogs, why we do the meetings one-on-one, the events that we have, the phone calls, to hold hands in those volatile times so when we get these tailwinds, people understand how that impacts their portfolio.
Right. I mean, the third quarter closed extremely strong. We said it last week. Earnings were up 20+%. October, market down 10%. Something wasn't adding up. We had great fundamentals, extremely low unemployment, extremely low inflation. We had gas prices coming down at the pump, leading to a strong consumer. Leading for the close of the year, holiday sales looked great. And yet, again, the market down 10%. Market continued into November to be down until really November ended positive, but only because of the last couple of days last week. Because, like we pointed out, there were two main factors really holding the market down. Two big headwinds, not tailwinds, was the risk the Fed was going to be too aggressive and that we would go into an all-out trade war.
Well, and you also had the thought process out there that trade war would turn into a big recession or a big drop in the market.
Right, yeah, and that's one of the leading reasons why maybe energy was down is because there was risk that we'd be in a global recession because of a trade war. And so both of those two main risks seems to have been elevated away, maybe pushed out to next year. And what do we see? The market is shooting up, which is very good, which is why, you don't want to over-focus on the short term. You got to look at the long term, and that's one of the things we try and do here is we try and back away from today's news and look further out.
Right, and talk about the energy. Both Ashley and you had points about the energy.
Yeah, I think we Ashley brought up some good points, but I think we may have put a floor into energy prices over the weekend. A lot of people announced, I think Canada's largest oil producing area announced a huge cut. And then Qatar surprised the world by saying they're going to pull out of OPEC starting in 2019. Yes. And then Ashley had some really good.
Yeah, talk about that.
Well, the price in crude was the largest drop in November in 10 years. It fell 22%. But what we're talking about, short-term, long-term. Short-term, that's interesting because the prices at the pump are the lowest they've been in 3 years. That's going to help the consumer right here at Christmas. But long-term, as Trey said, that will really help the inflation numbers and kind of take some of this uncertainty with the Fed off the table a little bit. And they won't be maybe quite as, fired up to increase interest rates. That's been a lot of the problem we've had. So if that will mute that down, that will help us a lot long term.
Well, and also from the standpoint, the theme this year has had been a lot of anxiety and anticipation of bad things to come, while the news, actually the facts out there were very positive. And you brought up the point how the U.S. is now the largest producer.
Absolutely.
From oil energy.
Absolutely, and now basically we're in control of that. And to that point, OPEC's meeting Thursday, probably the most consequential meeting they've had in 4 years, and they're having to deal with us now because we're producing and exporting. That's a whole new dynamic.
And when the price goes down at the pump, what's that like, gentlemen?
Yeah, that's good for the consumer. It's great for the malls and online shopping and those kind of areas. But it's now hurting our producers, which historically we've never had that mixed bag before.
Right. And Adam, you brought up some really good points. Go over that with us.
Yeah, following the G20 summit, people are wondering what are the immediate reactions to this. Right. So we have agriculture, energy, industrial. Specifically agriculture, soybean production. The Dow futures are up 2% for January. That's huge. We're going to see immediate impacts in those areas. So, China has already said that they're going to make immediate purchases in those
Right.
areas.
Yeah, so the next 90 days, we may still have some of this volatility as everybody looks to see if China lives up to what they promised.
Absolutely.
But today, the news is very positive. Those tailwinds are very strong, and the year's not over. So as we head towards the end of 2018 into 2019, we are going to continue to look at all these things, keeping the facts as well as any negative news out there to see what really adds up. And hopefully we look at 2018 ending this market on a very high note. We'll keep you posted as we get into these holidays. Thanks for watching. Thanks for forwarding this to your friends, family, and colleagues at work. And also, we greatly appreciate those of you that just email us your appreciation as we watch your portfolios and work every day to make a difference in your lives. Thanks and have a great week.